Welcome to Profiletraders. This is Reza and you're listening to my market analysis for September the 4th. As we can see through this very long profile shape, market is going through a horrendous amount of turbulence where the moves are extremely aggressive and extremely two-sided, meaning that if you married yourself to one side, it's almost a guaranteed that the reversals will take your profit away and make you lose money if you do not protect yourself correctly in such a market environment. Of course, this market environment is reflective of what is going on, which are several elements taking place at the same time. You have a Chinese meltdown that is impacting pretty much every single financial markets in the world. You have a Federal Reserve that is in talk of hiking rates some days and leaving rates as they are other days. And you also have few of the Federal Reserve bankers out on a daily basis talking about rate hikes and others coming out talking about leaving rates alone. And then to this you add the uncertainty that we have seen with the price fluctuation, which has been a very two-sided, extremely aggressive market where it's very difficult to stick to a direction for more than hours before seeing very aggressive reversal. And the combination of all this creates this extremely long, very wide range and very uncertain profiles that you are looking at. In order to see a better picture of what's taking place, we need to look at our daily chart. From a daily chart point of view, what we are seeing is absolutely textbook typical, which is after a very strong push to the downside, which happened during the Chinese devaluation, etc. We saw a retracement of that move which contained itself below 2000. These kind of retracements are very typical because everybody that has been used to this up move for this many years always have a feeling that these kind of drops are automatic buying opportunity, and because they have been used to be saved by the market, they always step in and buy the market because they believe it is a buying opportunity. But as I have explained it in my market recap couple of sessions back, when the smart money is exiting the market, whenever you get bounces like that, there is no support provided to the market, and after this money comes in, market then falters back down because it is not supported by smart money, versus in such a situation that we had before, every time it would drop, smart money was picking it up because they were in the accumulation phase of the market. But after the market went through this distribution phase, now they have no more interest on holding the market, and on the contrary, they would rather see the market drop so that the weak hands are cleaned up, price would come down, and then they would be able to buy it for themselves from a much cheaper and a more distressed level of the market. Now it's at an extremely delicate and pivotal point, which is 1900. If 1900 holds, we may start to see a very wide sideways market ranging hugely from 1900 to 2000 without either side of it breaking and becoming very, very aggressive and very, very volatile. On the other hand, if we do break below 1900, as I have also explained at several market recap back, we could then come for a retest of this low which we have seen not long ago. If the retest of this low doesn't hold, downside projection on this drop calls for 1774 area, which would be very much so the length of this last leg of drop, duplicated, as you can see by this line here, from where this last push down has started. And if we copycat that range down from this point to the downside, it will call for 1771, 1774 area. So now we are dealing with a very, very important area of the market. This level of 1900 is serious support. If it doesn't hold, the downfall could become quite aggressive and quite exponential on the way down, because this will be your wave 3 down, and the wave 3s down are usually the most severe of all the waves, if you believe that there are such things in the market. So this was your wave 1, this was your wave 2, and now possibly we are in the process of forming and initiating the wave 3. Of course, all obsessions and all eyes on what the Federal Reserve will do or will not do with the rates. Obviously, we saw that phony baloney 5.1% unemployment rate coming out on Friday, when we only created 171,000 jobs. On the back of this, we learned that 94 million people are out of the job market. So what will the Fed do or not do, in my opinion, is regardless of the job market, because themselves they know that this 5.1% is nothing but a bunch of charlatan numbers that they come up with to make everybody believe that they are doing a good job with the job market. But they know deep down that job market has a much bigger problems, and it's in a much more severe distress than the 5.1%. I personally believe that they are forced to hike the rates sooner than later, because our ability to borrow foreign capital has pretty much stopped, and nobody across the globe is willing to lend us money at 0% anymore. So all eyes will be on that, since this market has nothing anymore to do with valuation, has nothing to do anymore with fundamentals, has nothing to do anymore with technical. It has become pretty much an interest rate market. There are talks of rate hikes, it goes down. There are talk of not taking it up with the rates, it goes up. So very difficult to make projection as of what should happen. All I know is that you need to be very fast on your feet in this market. If you hang in too long to either side, it's a matter of sometimes minutes before you get wiped out. So extremely careful with this market. And also it is very, very critical that you enter the market at the very exact price level, because if you pick your price levels wrong, it's almost a certainty that you get destroyed. So as of right now, in the very short term, resistance 1 lays at the POC above us at 1931.75. If we can clear through that, next level of resistance will be at 1941, and if 1941 is breached, we're gonna go for a visit of 1952 and a quarter up there. On the way down, as I explained, the area of 1900 to this 1896 and a half is life or death for ES. This level breaks, it should become quite brutal on the downside, because it will be a break of a major support. So we will see what Tuesday will bring, but it's gonna definitely be a very interesting month of September. As far as crude, also it's in a very chaotic stage of the market, extremely violent, extremely unforgiving, and extremely unpredictable. As you can see again during this session, they took it all the way up to 48 and a half, only to see pretty much the whole day's range being reversed that same day and the next overnight, which was a swing of between almost 3-point swings in this day alone. So now, as we are making lower low, lower high in the profile, definitely the very short term is on the negative side. And as long as now we remain below 47, price is wide open to come down first towards 45, and once 45 is broken on the downside, we are going to come and challenge all the skinny part of this profile, possibly down towards 43 area, 43.20 area. Again, same thing as ES. You have to be very fast on your feet. Neither side you can marry to, because it reverses itself very fast, very quick, and you have to be extremely precise on picking up levels. You pick the wrong level, no matter how wide your stop is, chances are that you get destroyed. Now let's take a quick look at gold. Really not much going on. I mean, compared to the rest of the madness we see in every other market, it is kind of tight range. Very orderly drop. It did hit a level of support that I had, which was this POC down here at 11.17, and then bounced off of it. The bottom line is the big picture you have to look at, which is 1100. As long as we remain above 1100, chances that we are going to come up after this consolidation to the downside is over remains. We break below 1100, we're going to go, I guess, retest the 1080 area. If we look at the chart on a daily, it doesn't look too horrible, because after this big push up where good volume on the buy side came in, as we are coming down, there is no distress selling, the range is shrinking, the sell volume is drying. Therefore it seems to me like this was an initial push up, now consolidation, and then if we start to push back up, and if we can copycat this last leg up that we saw from 1080 all the way to 1160, this could then push us up towards 1220 to 1210. Even though that gold has been under a lot of stress lately, I have no doubt that its time will come, and I have no doubt that this excessive printing from all the Federal Reserves will be punished, and I have no doubt that at some point money will shift from whatever gambling markets that they are in into safety, and gold will see its day again. So 1100 must be very much so, which is also the touch of this uptrend line, monitored very carefully. And of course you have a downtrend line in place right now that anytime that we break out of it and start to go up, then it will be a break on the upside out of this current consolidation that we are witnessing. So have a great Labor Day weekend. I will talk to you all on Tuesday. And if you wish to learn my method, you can get my courses and 1 year to my trading room for $550 money back guaranteed, versus some other joker that I saw today who's selling his course and his room membership for $3,500. It's amazing what you can see out there. Have a wonderful weekend.